Book 2 continues where Book 1 left off. You'll recall Book 1 started with the general principles of risk management and concluded with some specific insurance policies. Book 2 continues to look at other specific insurance policies, in this case the policies which are involved when a person is injured. So it's in the accident market per se. Once we understand that market, then we'll understand why government intervened in two particular examples of persons getting injured. The first is where people are injured at work, which is workers' compensation. And the second is when people are injured as a result of motor car accidents, which leads us to the road accident fund. So, having done that, we think we have covered sufficient specific policies to allow a person to be able to work with any policy, having got the general principles and interpreted a range of policies. So that leaves us free to move to another particular part of the subject, and that is specialist insurance markets. We don't look at the main markets, but there are a number of specialist markets which, if you're in the insurance industry, you need to be familiar with. So we look at those specialist insurance markets. There has been a development which started in the late 1970s, continued to this day. Major corporations have found ways of funding risks other than purely through the traditional market. So we look at alternative insurance mechanisms. And the last thing that we look at is a very important aspect of how the market works. The market works between consumers and suppliers, and there's an intermediation process. And so there are intermediaries involved, and those intermediaries are insurance brokers. So the course concludes with a discussion of the role of and problems of intermediation. Thanks.